Welcome to the Big Four Accounting Firms podcast, brought to you by big4accountingfirms.com. Now, today's podcast, I wanted to talk about something that I should have noticed a little bit earlier, but I just took for granted, and it's the China Evergrande Scandal. And of course, the Big Four Accounting Firms was their auditor. Now, Evergrande is one of the largest real estate groups in China, and apparently they had a huge debt burden, and many people think they're going to go under. It's a question of whether or not China is going to manage them and bail them out. A lot of people think they're not going to get bailed out, and China's just going to manage them. And reportedly, China's making sure that they are using their money, whatever they have left, to finish their projects and not pay debtors. And so this sort of increases any investment risk to China. But despite that, of course, everybody's saying that it's the auditor's fault that they went under, and you have every media outlet saying that PwC gave Evergrande a clean bill of health. And the PwC didn't even audit their financial statements. But people are saying they should have gave them a going concern, or, there should have been some disclosure warning that this company is a terrible company and not to invest with them, and there's going to be a looming demise for Evergrande, but they don't realize that's not how accountants work. And this is where the Big Four accounting firms and accountants in general just get themselves in trouble, because what PwC is balancing here, I don't think they've commented yet, what PwC is balancing is that they need people to pay them millions of dollars to look at their financial statements, whether they audit them or not. But on the other hand, they're not there responsible for every single problem. But if you say that you don't do that much, then you're also not going to get millions of dollars from people. So they have to walk that fine line. But this is going to be a huge fiasco for PwC, whether it becomes a financial one or whether it's just a reputational risk is another thing. But since Evergrande is in the news continuously, PwC is no doubt going to get pulled into this. And especially if this has ripples around the world. Like right now it's contained in China and Hong Kong for PwC, but if Evergrande ends up impacting the US market, then I'm sure that US will no doubt have hearings about it, and there'll be more regulation for PwC. This episode is brought to you by Boomer. Boomer helps you ace the interview at the Big Four accounting firms, and it does this by helping you practice on questions typically asked on the Big Four interview. And if you use the link or promo code which goes to tryboomer.com/big4, or the promo code BIG4, then listeners get 10% off their purchase. So go ahead and check out their website, tryboomer.com, and see if you like all the tools they have that can help you prep for your Big Four interview, and you do choose to purchase it. Make sure to use the link in the show notes, because with that link, you're going to get 10% off, or make sure to use our promo code. All the details are in the show notes. And there was another story along the same lines about a bank that ended up selling their exposure to Evergrande earlier because supposedly of their risk management unit. And they sold all their Evergrande exposure last year. And this is where I was saying in previous podcasts that the accounting firms can't be the ones that are constantly held liable for these companies going under. It has to be the banks, because the banks are out there and they see their finances. They see how much debt they have. And they also have their bank accounts and cash, and whether or not they have any cash. It has to be banks. It has to be other institutions. It can't just be the accounting firms, because it's not really, the accounting firms aren't going to see it early on. The banks and investors and other people are going to see it much earlier, and they're going to pay more attention than the accounting firm. So to me, it's not a matter of constantly blaming the big four accounting firms, even though everybody always does, because people's perception of what an accountant does is different than actuality. But I'm sure PwC is not going to get out of this one easy. And I mean, we just have to see what happens. But another issue this brings up is the big four accounting firms and their structure, because the big four accounting firms like to use their brand globally, but they're not really like that connected. And I'm sure right now, global PwC is not happy with PwC Hong Kong and their exposure there. Unfortunately, it's going to hit their reputation globally. I mean, I don't think it'll have that big of an impact just because PwC's audit footprint is so big at this point, and they're so ingrained in the audit market for financial services, and just they're the largest auditor in the world. So I don't think it'll have that big of a thing, but it could be, again, it could increase regulation for them and the industry as a whole. People will definitely have to take more training, but it could impact their ability to win consulting engagements, could impact their ability to win governmental work. We'll just have to see, but there's going to definitely be more to come for this for PwC. So make sure to subscribe to his podcast to get future updates about this, and also check out the show notes for helpful links that could help you and that could also help us. And thanks for listening.